World Financial Group offers entrepreneurs from all backgrounds the opportunity to start their own business on a level playing field. Dr. Jana Woodhouse, receiving the WCM Wall Street Pioneer Award by the United Black Wall Street of America, Inc., is one of those entrepreneurs.
I see WFG and TFA as a place where African Americans with an entrepreneurial mindset can flourish. And the bonus, we help families and serve the communities across the country.
To learn more about us, go to worldfinancialgroup.com.
We are the sons and daughters of the soul. We are resilient and forever forward-thinking. We ask for nothing else than the opportunity to live and to create the lives that we were meant to live. We want nothing but an equal chance at options and possibilities. The same possibilities and options to live out our potential as our fellow man. We want to be heard, understood, and expressive in our reality. We are the future. We are the creative. We are here.
She was told that she couldn't play with the boys. She was told that they were too big, too rough, too strong. She was told to give up her dreams and move on. She was told to just be pretty, be quiet, be a lady. She was told that women had to stay on their side of the court, stay in your lane. Playing and competing with men was insane. She was told that men and women would never be equal. Dreaming like that would only be linked to your mind, to your soul. She never listened. She knew that their thinking was old. She is magic. She is the definition of spirit. She is what champions are made of. She is magic.
Greetings and welcome to another show of Access Wealth Nation with Dr. Jana B. Woodhouse. And I'm going to remove these for a moment because I can. Life is getting good. Getting your checkup from the neck up, dealing in financial literacy. And today we're going to have a lot of good information for you. I'm excited. But before we do that, of course, I always have to make my announcement that you can make your chat if you have a comment, information, something that you'd love to ask the guest or myself. Please put it in the chat and the producers will get it to us. Also, if you'd like the book, How Money Works, I hope you can see it. Stop Being a Sucker. And that book is written by Mr. Tom Matthews and Steve Siebel, two of my partners in the financial literacy business. And so if you want the book, you go to Anaj Enterprises Inc. at gmail.com and just let me know that you want the book. Please give me your address because this is a physical book, not an ebook. So you want to be able to receive it. We've been mailing out a large number of books. I've heard from some of you because you also get the opportunity to have a free 99 free financial analysis. You know, my philosophy is if you have a plan, then you're definitely not planning to fail, but no plan, you are planning to fail. You can contact my office at Anaj Enterprises at 646-375-2121. You know, as you are knowing, and just mention that you watch the broadcast from Soul City Broadcasting Network and on WHCR 90.3 FM. The power of Harlem. And so in saying so, we've got some great information for you today. And I believe my guest has arrived. You know, it's important when we are in business for ourselves to make sure that we're structured right, that we are in a business to create profit. You know, I know a lot of people are told that they that this is a good place to get write-offs for taxes. Well, let me tell you all now, tax season is opening up on January the 24th, this Monday. You can start to e-file. Better have all of your information. We went through this last week. It is necessary that you have your up-to-date information. And if you do not, you need to double check what IRS has for you as information on irs.gov and open up your online account. These are things you need to do. This is a rough tax season. You do not want to delay your refunds. And this all, if you don't have the right information, you will be delaying your refunds. I promise you. So just wanted to tag that note in. And so what I'd like to do is to introduce my guest for today. We have Mr. Jeff Broom, who is the COO of, we have, hi, Jeff.
Hello, how are you?
Nice to meet you.
Yes,
Definitely.
pleasure.
I understand that you are the COO of Accredited Mortgage Solutions.
That is correct.
Am I correct? Okay, great.
Yes.
Now, audience, I want you to know this man is going to give you some real serious checkup from the neck up information. And it's important, especially those of you, I've reached out to you who have your businesses. You've sat with me, and it's very important to know that your business is structured properly. But it's also important to find out how you can get some funds. And as Mr. Broom said in one of his advertisements, is that you got to monetize that EIN number. I like that. That was very interesting to me.
Like that, huh?
So, Jeff, can you tell us a little bit about yourself? I know you've been in this industry a long time.
Right.
And so tell us a little bit about you.
Sure. So, born and raised, I'm from the inner city here in New York City. I'm from Brooklyn. And, many, many years ago, obviously going through school, got a real decent education, obviously through the high school system here in New York. But I also ran into a book called Rich Dad, Poor Dad many years ago, changed my whole outlook and philosophy on money, the value of money, what my time is worth. So from there, I went and I really applied some of those things, went to the classes, some seminars, bought about 14 properties in my early 30s, in my 50s now, out in New Jersey. So I did pretty well in the real estate game. This was a long time ago, before a lot of stuff we see on reality TV. And, went on to do some other projects as well. But really always was enamored with the idea of financial literacy, and realized at an early age how many of our Black and brown people, we were kind of losing the race. Because we really didn't understand some things about numbers and interest and things of that nature. And, when I started buying property, I really wanted to bring a lot of other family and friends with me. But they wanted to go, but they didn't really understand how to position themselves to really capitalize off of the markets that were taking place in there. And I went to school. I was probably only Black male in honor school in my high school. So I went to school with a lot of individuals, who were Jewish, Italian, they were Greek. Their fathers owned businesses. The kids could never really make a mistake because the parents were always there to bail them out. So they were third, fourth generations in of business owners, and having networks of individuals. And unfortunately, I came from a place I really didn't have that. So, we ventured on, got involved in a number of different businesses, and, became fortunate to be a part of this Accredited Mortgage Solutions, where we launched an initiative and a campaign called Hood to Homes, which basically is neighborhood to homes, where we really try to sit down and sort of what you do as well, try to educate our people on the importance of credit, which is leverage, right? All your dreams run through that credit door at some point in time. Your dream house, your dream car, your dream vacation, at some point in time, it runs through that door. And without it, we don't have that kind of leverage that we really need to compete. So, I'm from the inner city. I find our people, they want to do things like K-Solo, and sometimes we have to do like the Wu-Tang. We've got to form a group and put our heads together to make something happen. So we're very excited about that in the Hood to Homes project. And then we realized that, we got a lot of entrepreneurs, and then we realized that business credit, which is what you saw, and I'll end on this note, was really a missing component that a lot of individuals don't really appreciate. So we launched a campaign to help people understand really how to capitalize off of that other 9-digit number that we get from the government, which is way more powerful than a social security number. If you don't believe me, ask, Jeff Bezos and ask the guys at Walmart and Warren Buffett what the power of an EIN number is compared to a social security number, because that's what gets sold at the end of the day. So that's just a little bit of my background, but I'm sure we got a lot more to discuss.
Oh, I probably going to have you come back, because there's so much I didn't know about the hood to home part. As you may know or may not know, my entire passion is about bringing financial literacy to our urban community.
Yes.
If we know better, we'll do better.
Yes.
But no one talks to us. And
Yes.
so definitely we may even need to do some seminars together, some
Let's
Zoom
do it.
now that we can't do nothing in person. But definitely it's important. So what I'm understanding, we're going to talk about more so the business side and that EIN number, because I've tapped into some of my listeners who have businesses, struggled through the IDL part, struggled through the PPP, a lot of it because of lack of knowledge and proper filing of their taxes. And those need to be on alert that PPP IRS is coming with a vengeance.
Right.
Make sure did you really make that money?
That's it. Exactly.
And are you going to pay taxes on that money? Absolutely. And how'd you run from a $10,000 profit to $100,000? All those things come up. So can you tell me a little bit about the opportunities that you can benefit from having your EIN number, and what can you do? I was reading some of the criteria, which is not a very high criteria, having some money in the bank, a decent amount, which is a small amount, and then having a credit score as little as 600.
Yeah.
Wow.
Yeah. So it's like, and you're very well aware, on personal credit, building out a business credit profile is similar, except the program that we have is very structured. It's not haphazard. Most people build out a personal credit profile organically. We apply, we get denied. We apply, maybe we get this card. We apply, maybe things happen. So over a period of years, you build out a personal credit profile. But if you really understood how to do it strategically, knowing that your first credit card is probably not going to be an Amex or a Chase card. Typically, when we look at, and business credit works the same exact way, typically when we get a personal, and I went through this, you get the store cards first. Maybe you get like a Century 20 was not around, but you get the store cards first, the Victoria's Secrets, whatever it may be, those high interest rate cards. Then you move into potentially getting maybe like your Capital One cards, the Credit One cards. Those are the lower tier credit cards. You get your Macy's card. Then you start moving into getting your bank cards. But you just can't come out the door and say, hey, I'm 18 years old and I want to get an American Express. Well, it's similar to business credit. Before you can trigger certain approvals, you got to move through a certain process, right? You have to have a certain number of trade lines to trigger these things. And we need to understand it. Most of us understand, because I'm a firm believer that building a personal credit or any credit profile is really building equity long-term, because the longer that credit profile is in place, 2 or 3 to 4 to 5 years, it gains equity, it gains scores, it takes time in business. So building out a credit profile is equity. And on the business side, it's the same thing. We know the language, or you should know the language of Experian, TransUnion, right? And Equifax. I understand it. I'm in the mortgage business because we pull the middle score. Many times you ask a person what their credit score is, they give you one number. And I think the most important number that you should know once you get out of school is not necessarily your SAT score. That's great. But you need to understand what your credit score is. You need to sign up for a monitoring company. My weight might fluctuate and I'll be a little upset. But if that credit score starts to fluctuate too much, we have a problem. So you got to be careful what you're monitoring out there these days. And that's where our focus needs to be. But on the business credit, the government's given us a gift. If most of us knew we could have another social security number, well, those with great credit would say absolutely, because now I got 2 times the doubling power. And if you got bad credit, you certainly would want another social security number so you can build out now intelligently. You know how you messed up. You would build out a great credit profile. Well, the government gives you an EIN number for free. And if you understand that there's, your Experian business, there's what they call a Dun and Bradstreet number,
Yes.
which actually is a paydex score, which is great because if you're, government entities, they want to know, do you have a paydex score? Not just a DUNS number. You need the paydex score, right?
Can you describe the paydex, what that really means?
Sure. So it just shows you somewhat of a payment history of on-time payments, right? So everyone wants to know if you're paying on time. So typically the right kind of score to get on a paydex side is an 80 paydex, meaning you paid your bills within 30 days. Because most business owners don't get an invoice, or businesses, large companies don't get an invoice and pay that day. They pay on a net 30, right? Why people go to Shark Tank, because they can't pay off. They need credit lines. They need access to, have a product, sell the product, get paid off the product, and then pay the wholesaler or the vendor. So these are all very important as well. Even if people want to get, MWBE and get minority certified, these are aspects. Even the SBA is starting to look at business credit. And I'll end on this note. Business credit is, what have you as a business in the last 2 or 3 to 4 to 5, 10 years, what has the business borrowed and paid back? Not you as a personal guarantor. What has the business done? Because that's really the health of the business. So the program that we have helps people structure a business profile where a lender will say, wow, this business is now standing on its own to a certain extent. We like to give them more money. And trust me, business loans are typically much higher than what you could do on the personal side, because the business pays the person. So what's really generating the money is the business.
So this program that you have, does it help people who would be looking to even structure themselves properly? Because that's one of the things I run into more than ever as an accountant is that people are not structured. If I could get $1 for everyone who said they had an LLC, one member, okay,
a single member LLC,
just get $1, I wouldn't have to ever work or have a business at all. My business would be in collecting those dollars.
How about that?
I have people come through because they don't. And then if they won't have a partnership, which I tell folks, partnerships are like marriages. So, you got to be careful there who you partnership with. But even if you have an S Corp or a C Corp, which still could be an LLC, but the thing is make sure you have yourself structured right. So your company, does it, or the program that you have, does it allow you to, like I could send someone and say, this person, they want a profit, a nonprofit, because people dream big, so you got the profit, the nonprofit, the corporation, this own this. Does that program help them to structure that?
Yeah, it does. Certainly, I think that the challenge is that most people, they just say, I want to open up a business, right? But there's so many different aspects of a business. And should it be an LLC? Should it be a C Corp, an S Corp? These things are left up to debate. So they're not going to necessarily tell you what to do. You have to have an understanding of what business you want to open up. But they do have a conduit that helps you set that business up properly, because it is so important that you know how your business is set up. So when you put in applications, like I have a company called The Business Kings, and early on I would write The Business Kings, but really the name of my company is The Business Kings LLC. So if I'm filling out an application, The Business Kings, I would get denied because the name of the company is The Business Kings LLC. So when you do this properly, you need to have, obviously, you need to have an address. You should have a phone number. You should have a website. So this program helps you structure all of it. If you don't have a phone number, we're going to help you get a phone number. We're going to help you look like a real entity that someone wants to give money to, and not just a fly-by-night operation. So all of these things, these components, they might sound crazy, but at the end of the day, they really do need to be structured properly, even on an application, so you don't necessarily get denied. So there is a structuring that definitely goes back and forth. The great thing about this program, to be honest with you, Ms. Woodhouse, is that when you sign up, you actually get a credit coach. And this credit coach is really with you for the next 5 years, per se. Okay. Because I haven't met any professional, whether you're an actor, you're an entertainer, you're a boxer, whatever it is, tennis player, whatever it may be, singer, every professional has a coach. The problem with most people is that they don't. I mean, you could work out in the gym all day, but if you're really serious about working out, you're going to get a trainer.
Yes.
So this program provides you with that coaching that's assigned to you, and you have a call with them every 2 weeks, and that happens for the first couple of years as your business grows, so you can mitigate those mistakes that you might make.
Now, what is the average time? Let's say, for example, we're looking at your perfect client. Is this a person who is just entering into the business world, or are these people, can it be someone who's been in business 5, 10, 15 years? What's
Sure.
your target market?
Sure. The perfect business really is, first of all, starts off with the mentality of the person, right? Because they can have the great business, but like anything else, if you don't accept the coaching, then there's a problem, right? So it all really starts from the mentality of the individual. So startups are phenomenal. If the person has no EIN number, they can start off here. If they just got involved, I think that some of the easier people are the people that are just starting their business because they're a little bit open to be mentored, to be tutored. Sometimes people that have been in business for 5 or 10 years, like, oh, I did that already, or I got this, or I got that. Well, yeah, your company's maybe at a level 5, but Walmart and Amazon and Apple, they're at a level completely different. And if you really want to hit the upper echelon of real money, you are going to have to establish business credit. So seasoned businesses with cash flow, phenomenal to come in, long as they're willing to go through the work and accept the coaching. So really, it's not a good or bad when it comes down to who the business is. It really comes down to the mentality of the person. Are they willing to be coached to help them get to the end game?
Understood. So someone coming on board with you, what is the major process? How do they get in touch? How do they have like an orientation or something like that?
Yeah. So what happens is that they come in, and every day for the first 5 days, you're on the phone with your coach. In addition to that, there is some software. So this is all tax deductible as well. So there's some software that goes along with this, so you can track and see what your progress is. And I think that always works well when people have to go from point A to point B. So it's structured, right? And we're going to help you get a certain number of accounts, because you have to get some starter accounts. And then you're going to move to a certain, like a tier 2 accounts, tier 3. What we really try to do is teach the mentality of the person. If you've seen the video, is really right wallet, left wallet. My right wallet should be for my personal expenses. My left wallet should be for my business expenses. So if I open up an office right now and I want to get 3 or 4 or 5 TVs that go in the office, you shouldn't really be buying that on the personal. That should be a business expense under the business credit, under the business profile. If you even got it really simple, just getting gas, we all do it very simply. You're going to a business meeting, start using your gas cards for the business. So
the cards are in the business name.
Yes. Okay. Exactly. Right.
So someone new, starting, and they were not new, been in business for a while, and they need to get a business credit card. Wouldn't they have to guarantee it themselves anyway?
Yeah. So initially, they would. The key to this program is to build out such of a profile so that when you actually do apply for something, same way we do with regular credit, right? If your regular credit is not good, you either got to you need to get a secured credit card or a cosigner.
Right.
So when we start the business credit, since the business credit is so new, you are the cosigner as a personal guarantor, no different than if you became a cosigner or somebody else co-signed for you. So but like everything else in life, your mom and dad might co-sign your first car, but after that, you now have a credit profile that can stand on its own. So we use the personal guarantor of your social to be the co-signer of the business, and then you build out your business credit strategically with the help, and then you no longer need a personal guarantor, and then now the business stands on its own. No different than if Amazon goes to purchase something, Jeff Bezos or whoever is in charge right now, they're not putting their social down for anything. No. The company has built out such a business profile that it stands alone. And typically, you know, as an accountant, we all know we really want to be separate from our business from liability purposes. But if you don't know how to do it, then the two are now intertwined.
Yeah, that's where it gets very dangerous. I've seen so many businesses, especially over the past 3 months, you know, because it ended towards the end of the year. And so many people, when I look at their books, they have, you know, like they bought a Dunkin' Donuts, you know, they bought the family groceries and with their business account. And I'm like,
they're commingling the funds.
I told him, I said, I used the example. I said, if you owned Amazon and they gave you a card, to a business card for expenses, you wouldn't be buying family groceries on that, because that's called embezzling. So, or you have to hurry up and pay them back for it. So why would you do that in your account? I mean, I'm astounded at what people do, but again, they need to know more.
Yes.
So, you know, so for someone who maybe has been in business a long time, but has not had any cards, you know, in their business name, and it's probably because of, well, lack of knowledge or lack of desire. I've heard about the Dun and Bradstreet, of course, we've seen that, but I always look to see, well, how in the world does this help? Because most of the guaranteeing stuff that's done is, you know, by the person themselves.
Correct.
So how do you transfer that over into a business?
That's a great question, right? So here's the problem with business credit is everybody that you do personal credit you apply, they all report to your social, right? Capital One, Chase. Most businesses that you might do business with, they don't necessarily report your transactions. So you could be doing business with one company for many, many, many years and really get no credit for it.
Right.
That's why the coaching is so strategic to say, okay, if this is what you're going to do, here's some of the companies that you are going to align yourself with, and they actually do report. So you're actually now getting credit for taking place in your business, because many people are not. It's not that they're not doing business transactions. It's just so very few companies that actually report some of your transactions. You're not really getting credit for it as you move through that process. So that mentoring on say, hey, listen, now you should apply for that Staples card, because you might apply for a Staples card out the gate. They might pull it. So this person has no history whatsoever. And all of a sudden you get denied. So you have revenue coming in, but it is very strategic. The same way on a personal credit report, you just can't go from getting a 9-to-5 job per se and getting a black card at Amex. There's a certain credit profile that needs to be built out. And here's the thing about it, you know, Ms. Woodhouse, is that you're already spending this money. You're already getting paper, already getting ink. I have a BJ's corporate card. Bottom line is, I go to BJ's, but you might have an event that you need to buy food, your copier, your printer, your TVs. We just need to learn how to reallocate our thought process with our resources to really build that profile. We had a deal today, because this is more than just building out business credit per se. I'll just make this note. It's almost like Credit Karma. Credit Karma is really not, I'm in the mortgage business. We would never lend anybody money off of those scores. But they're ingenious in the fact that they collect a lot of data, and they really make their money by selling you a credit card, all the different offers, right? So with this program as well, there's a platform on the back end that has about 50 or 60 different lenders that look at the aspects of business credit. So we had a guy who was denied today. He needed to get equipment, $200,000 of equipment for his business, and he got denied because he didn't have a Dun & Bradstreet or a Paydex score. Now, the underwriting criteria of different companies that are out there, they underwrite files and they pick and choose. No different than, you know, Capital One might use all three bureaus, but Navy Federal might only pull Experian. So that's why you need to build out a profile across the board with Dun & Bradstreet, Equifax Business, Experian Business. There's SBFE, there's SBSS. There's so many different things out there. But, you know, we kind of take it one step at a time.
I got you. Someone had a question. Okay, it disappeared. I'm sure they'll put it back up. But, here we go. How do you know when your personal financial profile is no longer needed to build your business financial profile?
It's a great question. So, number one, you got to keep in mind there's always algorithms when it comes down to it, right? So, if your business is probably doing $10,000 a month, you might not want to apply for $1 million. And the key to it is that how many business owners have ever pulled their business credit report, right? So there's something called nav.com that allows you to actually pull your business credit report, and you'll be surprised that's in there. It kind of gives you an idea of how much your company is worth, how much money can you probably borrow. And I think that the thing again is, before, in our business model and what they do, you should never get denied, because they're not going to let you apply for anything that you haven't already triggered and you haven't already hit the numbers yet. They'll say, well, you're not ready to apply for that until we hit this litmus test, right? Until we hit this mark. So depending on how much money you're going after, I think the most important thing, you probably have to consult somebody to a certain extent, a professional, say, here's what I'm trying to do. Here's where my personal profile is. Here's where my business profile is. Because every person who's listening to me right now should be aware of those two scores. You should be aware of the score under your EIN, and you should be under the score of your social. The problem is many of us weren't raised, we weren't rooted in business, so we only think social. There are other ethnicities that move the social to the side and strictly want to look at the corporation business. It's just a shift in the mindset. So
understand. See, that's one of the things that I'm seeing. I'm also I'm gonna tell y'all, because I always give transparency, is that I have never really paid attention to my business credit. I have been focusing in specifically on my personal, and it's wonderful, but that I'm hearing something, that I didn't even know about the NAP. There's a world, as I've told everybody out there, I talk about the fact there's two worlds. There's the world of the rich and the famous, and then there's the world of the people who need to get to be rich and famous. Okay. And the thing is that when you're working towards building your business, these are very key. It's nothing to say, many people say, I'm in business. You are not in business till someone recognizes that you are in business. Okay.
Absolutely. You might have I find people that are really in a high paid hustle in a business, right? Because just because you're earning money doesn't necessarily mean you're in business. And like you said, who recognizes you as a business? Just because you're making money, it could be a very high paid hustle.
Yeah. And that's what we don't want. I know there's a lot of multi-level marketing companies that out there, and they sell themselves under, you get all these tax write-offs. Well, let me tell you, I'm going to call it is that IRS loves you with the passion, because what they've done is, especially this past 2 years, they have closed down the corporate audits. They don't even want to audit someone on a corporate level, but they love that Schedule C.
They love that.
That self-employed person, because they're able to audit you and pull in and then discern between whether, like you said, it's the hustle. The IRS calls it the hobby.
Yeah,
and
absolutely.
So this year they're coming for the hobbies, and the hobby is that you've been making a loss for the past 5 years.
Wow.
And showing no income, no profit. And so that they don't mind counting the income, but they're not going to let you take the deductions. So that's what's happening right now.
Can I
also give the number? Okay, we have another question. Do you have to have a minimum of business income in order to apply for the Dun & Bradstreet? I'm sure number.
Yeah, that's a great question. So the Dun & Bradstreet number is free. Okay. Right? Doesn't cost any money to get one. And then the key is to actually build it out. Everything should be with this program is strategic, right? So the Dun & Bradstreet number is free, but you want to build it out, and it takes like 3 or 4 occurrences to get a paydex score. So you might have something that hits, and then you got to do business with the right companies that even report these transactions.
So what type of occurrences is this with companies that are a specific, like when you do your personal, okay, I got to find a company that reports. So is
Right.
it on that same level?
It certainly is, right? And it's work, right? But everything is work, because what you try to do is you try to condense a lot in a very short period of time. So people know your starter accounts are like the Quill, the Granger, the Nest Egg. Some of these accounts that you have to purchase it, and you might have to spend some money, right? And then personally guarantee some of it, only because the credit report is so weak. And then once it stands on its own, see, here's the thing about it, Ms. Woodhouse, is when you open up a major company, they have a CFO in the company. And the goal of the CFO is to do anything but is to build out the corporation's credit, to go get trade lines, to go get credit lines. That's the focus of someone when they come into an operation, right? But we as everyday average business owners, we don't have somebody. Think about it. As important as credit is, do you have a credit division? When I look at business plans, I always ask people, well, what is your plan to build out the credit of the company? And 99% of them never have a plan. So therefore, 99% of them, as you talked about, if you don't have a plan, it's probably not going to happen. But every business needs capital. You're always going to have to expand. Apple is trying to increase their trade lines, their credit lines right now. Walmart, Amazon, every major company. So ask yourself as a business owner, do I have a business plan to grow the credit profile of my company? And if not, then that's a major flaw in your business plan. So what we've done with this program, it addresses that CFO part of it, and they actually walk you through some of that process. And not only with one, you have multiple EIN numbers. So therefore, we can only have one social. So it's so funny because, you know, whatever you think of him, Donald Trump said to Hillary Clinton, she said, well, you went bankrupt. He said, I never went bankrupt personally. What he did is he had a corporation that went bankrupt, but he personally was okay.
Yes.
So you have multiple EIN numbers. So really, you can have 4 or 5 or 6 different credit profiles if you understand how to, because I guarantee you, Amazon's got a whole bunch of different EIN numbers and corporations with millions and millions and millions of dollars of trade lines.
So, in one question I have is that, okay, you've made the mistake. You have your Staples, accounts. You have all the quills and all of that, and it's all in your personal name. So, is there a way to link, or is it that you really got to start from day one?
Right. So those companies you typically wouldn't sign up because they're mostly structured towards businesses, right?
Yeah.
So therefore, if you did it, and most of these things you can correct, right? Okay. I saw a good question about, and some of this stuff has to be done with the.
Here it says here, if your business has been incorrectly structured, can it be changed? And is there a time limit to change it without changing the name that it has been branded?
Right. So, and maybe you can assist me with this question as well, because sometimes you have people that had an LLC, they want to change it to a C Corp or S Corp, or sometimes you want to change the address, and now maybe you had a home-based business, and then now you want to move the location because the address is all of these things are very important, right? I'm in the lending game. So in the mortgage business, you have so many different things. They want to know exactly because if you default, they want to know exactly what your address is.
Where to find you.
Where to find you. I'm not serving all the 10 addresses you have. So even in the lending world, they want the driver's license to match the utility bill. Sometimes we want all these things to coincide at the end of the day. So when it comes down to that structure, certainly you really want to, talk to your accountant. And again, a lot of these business concepts are opinions. You could talk to the accountant who has one opinion. You could talk to your lawyer who has a different opinion.
Totally different. I done battled a few attorneys, especially when it came down to they want an LLC and I'm like, okay, how we being taxed, babe? Because IRS could give 2 hoops about your LLC. That's a state entity. They want to know how you federally getting taxed. So And most people give that deer in the headlight look like, what do you mean how I'm getting taxed? I'm an LLC. Okay, that's not a taxable entity. So
Right.
how that attorneys love it because it's harder to default on the veil, the corporate veil.
Okay.
If you need to have your if you're an LLC, you have less paperwork, less board meetings, every time you move, less minutes to have to write. When you have an S corp or a C corp, you got to write some minutes, and you have to have some meetings, and you have to have some shareholders meetings, and you got to be able to prove it. Even if you're a shareholder of one, you send yourself an email and say, I'm having a board meeting on the 12th, and you better show up to it.
Show up.
So it definitely is that. And yes, you can change the entity. You have to amend, and therefore there's your records of approving that you have the right to change the way the entity is rolling. This way it sort of flows with each other. If you have an LLC that was one member, and now you're joining more members, but now you've had a board meeting to approve the fact that you're going to now do an S corp or a C corp, and as of this date, and so then it will travel. Now IRS prefers that the EIN doesn't change, but sometimes it does, and sometimes you want it to change because you done made so many mistakes. But you can do it if it's all, and that's what the beauty is with corporations, that I feel is that no matter whether it's an S corp or C corp, is the fact that through contract you can make so many changes. You're allowed, if it's in writing.
It's in writing, and that's, like you said, that is truly the beauty of it. You can change an operating agreement. There's things that can be done in a very short period of time. We like to close our real estate transactions. We tell people they can often close it in the name of a corporation. So sometimes it's easy to transfer shares, right? Sell the shares, and all of a sudden you change the ownership in certain situations. But again, that's an entire language sometimes that we just don't understand, and we really do need to understand it. And what I encourage, my Black and brown people, is that, there's a saying that, cheap labor doesn't come skilled, and skilled labor doesn't come cheap. So at the end of the day, people have, ideas and grandeur of making millions of dollars. But when it comes down to certain investments, a good lawyer, a good accountant, there's certain things that you just have to be ready to run a business, that you have to invest in, and, do that early. Right.
I am so glad you said that, because
Yes.
I have told people, so it's always good to have someone confirm. I said you need your team.
Yes.
Even if you can't pay your team the full amount, you can pay an attorney. How much is your hour?
Right.
The accountant, how much is that hour? I can't put you on retainer, even though people think that as soon as they get an accountant or a lawyer that everybody's on retainer. And gave a dime, but you didn't call me back. Okay. When did you get on retainer?
Right, exactly.
Exactly. But we have a question from Allison. Is it possible to get business credit when you're operating a DBA?
Right. So the key to business credit is that it just needs to be an EIN number, right? Because that's a corporation. A lot of times people have, social security numbers, and I believe they have a DBA set up under their social in some way, shape, or form. Yes. And right. So the DBA, if there's a corporation and that 9-digit number, which is an EIN, that separates you to say, listen, I'm running a business. I'm running a real entity that I can have employees, that I can potentially, we get it for free, that we can make millions and millions and millions of dollars under. So you really want to have that corporation set up. So that's the way that you build business credit, and really not business credit under your social, because the idea is, when you really think about a social security number, you really need maybe 3 or 4 credit cards. You got maybe 1 or 2 car loans and a mortgage or 2, maybe a student loan. Outside of that, there's not a whole lot we need personally. On the business side, we need equipment, we need cars, we need access to trade lines. There's so much more on the business side. And that's what the beauty of an EIN number is. And it's amazing. The government gives it out for free. But I guarantee you probably a good 98% of us who have one truly do not recognize the power in that 9-digit.
Oh, I truly agree with you. I agree. Oh, is it true that it doesn't make sense to have an S corp unless the income is at least $40,000? What? You got it. If you want to take it.
That's a question that I don't have the expertise.
Okay, I'll take that, and I'll take that one. The S corp and income is not the question. The S corp is how is your business running? Under the S corp, you are a shareholder, just like you would with the C corp. The problem is that it's whether you want the opportunity as you're building your business and there's a loss and the money that's creating this business is coming from your personal income. And you want at least to get that write-off. So you would get what they call a K-1 form by sharing with the corporation for your shares and what the loss or the profit is. The other beauty in the S corp is that if you have a profit, I don't care whether it's $2, that profit does not get exposed to self-employment tax. That's what you're trying to run away from, because okay, side note, this is just my belief. I don't believe that I need to pay maximum Social Security and I'm not going to receive it all. Okay, I want to build my own retirement plan and have that freedom and be able to add as much as I want to it. So when you look at your S corp, I'm putting money in, I'm supporting the business. I need that write-off, but if the business has $20,000, $30,000 worth of profit, I don't want to pay the really over 13% in Social Security and another 4% in Medicare tax that I'm not going to be getting. And I'm funding the people who are receiving it now. So it really is, when you look at that type of structure as an S corp, it can be beneficial. Now, as you start to grow and make your profit, and you have maybe even a job or another business, as Mr. Broom said, is that at that point you might want to have a separate corporation because you don't want to commingle them. Because what happens is that if you have a job, the journey of the broke, then you have that income, and then you got to add that income to whatever the corporation is producing, and that just throws you into another tax bracket where the corp can basically survive on its own. So I hope you understood that. That is, you're welcome. You're welcome. So okay, we got more. Can any business type purchase items like cars and real estate in its name? If so, what's the benefit? Well, I'll add to that also before you answer that.
Well, go for it.
That I want to know in what states, because I just had clients, and this is my concern. I have clients that have property in other states. Example, I have a client that has 10 properties in Tennessee, and Tennessee has a rule that if you put the property under the business, they have a right to charge you in real estate tax 4 times the regular amount for it. Yeah, that's so where I came up with this phenomenal idea and strategy that the client was going to put it into an LLC that was taxed as a corp and pull that income. Here comes the state of Tennessee and said, yeah, well, your property taxes are $400 per property, but now you're going to pay about $1,600 per property. So the taxes, they just quadrupled it, So I lean to what's the benefit for you putting your car and real estate in the name of the business?
Yeah, sure. So a lot of times in our real estate transactions, so our bank is not traditional in terms of, I'll talk about real estate very quickly, right?
Okay, that's good.
So we're not traditional like the Chase, the TD banks. We do a lot of what's called non-QM, which means non-qualifying mortgages, right? So
Okay.
your FHA loans, they qualify to be sold in a certain way, it has to be underwritten. most of the programs that we feature are for business owners. And typically what we look at is the last 12 months of business bank statements, pretty much. We look at the business bank statements and the credit report, which means that we underwrite and close deals where we do not look at or want to hear about tax returns. We don't look at W-2s. We don't look at pay stubs. Because what happens, as you well know, that many business owners, number one, they're very lax sometimes on doing their business taxes, right? You work a 9-to-5 job, you work for the police department, you pretty much don't have a choice. You get a W-2, you get a check at the end of the year, you need to file your taxes, right?
Yeah.
But business owners, we're in that position that we're earning money, but we're reinvesting our money back into our business. So to give a third of it away to anybody, Uncle Sam, who doesn't show up to work, it's kind of difficult to do. So what we do is we make the money, either we write off so much of it so that we limit our tax liability, but then when you have that 4506, or when they want to get a transcript of your taxes, you made $300,000, but your taxable income was $50,000 because
Right.
you wrote off so much. Well, they look at that at Chase and all that, and they're like, "There's no way in the world this guy can afford a $400,000 or $500,000 house because you made $50,000." So either business owners run into that quandary, or they're very lax and don't do the taxes at all.
Yes.
So we realize what really pays the mortgage is the revenue that comes through the bank statement, not what's on the tax return. So that's where we live at. So typically, those are all EINs, those are all corporations, and we close in that business owner's corporation, and it does not show up on the personal credit report because we are funding the business revenue of the corporation, and that's what we use to fund that scenario. So, obviously, if they default, there are documents that it will fall to them on a personal guarantor perspective.
Okay.
Right? But it doesn't fall on your credit report. So it's really not impacting your debt to income ratio. And most of your savvy real estate investors will try to close in the name of a corporation. Right?
That's interesting. I'm glad you mentioned that because it has been a real problem for me where clients who are self-employed or have their businesses and they're showing income, which always tripped me out. I said, okay, if you have a W-2 job and you made $300,000 and you spend every dime of it, they will give you a mortgage. But if you have $300,000 in your business and you ended up spending $290,000 in expenses, nobody wants to talk to you. And I could never understand why mortgage companies didn't look at that, because I'm like, yo, this person spent every dime of their money, but because they have a W-2. And so that's where I came up with the idea. I said, well, you set up your business and then you give yourself a W-2 form, whatever you need to show. You got to show $50,000. Well, but the problem is you got to pay that Social Security and your Medicare tax, and you got to pay both of them because you got to pay both sides. Most people don't understand when they have a job, they pay half of the Social Security and they pay half of the Medicaid. Well, there's the job is paying the other half.
Correct.
But when you are the job,
you're paying 100% of it.
Sides. And that's where I'm like, that's more tax than I want to pay.
Indeed.
Yeah. So definitely, I like the idea of putting the business in this mix because then they don't get exposed to that.
They don't get exposed. And as we know, as business owners, most business owners do not pay themselves a check. They live out of the business bank account, right? And maybe transfer some money to their personal side of it because there's so many aspects to running a business. I mean, just because you can bake cakes doesn't mean you should open up a bakery. Just because you can fix cars doesn't mean you should open up an auto body shop. Right. Because there's so many aspects of it to run a successful business. And that's why you said the team aspect is so important, because even these little questions, no matter how gifted and talented you are, that's why Shark Tank exists, because some people only have a certain amount of skill set and they really need to bring a professional in to really help them get, to the next level.
Take it to the next level.
Absolutely. 100%.
You like you said, which is one of the faults of our black and brown communities is that, homegirl makes some good cornbread. And you're like, yeah, but that doesn't mean she has to open up the cornbread store,
Not at all.
because she needs to have a team, because in most of our communities, unfortunately, the marketer, the owner, the accountant, everybody's the same person. They're handling it all, and you have to have an infrastructure system.
Well, we live into to that point, right? You have to have an infrastructure. We live in a very litigious country, right? Everything is about lawsuits when it comes down to it. Or a lot of it is about lawsuits. And then we know the wealthiest people in the world, they always say you really shouldn't have anything in your name, right? In the event that someone sues you, you'll become personally liable, right?
Yes.
So, we have a young lady we're doing a mortgage for, and thank God her debt to income ratio, right, was extremely high. And we know she had a car, but the great thing about it was that she was paying for her car out of the business account and not her personal account. And that shift right there was huge for us to be able to move that liability over to the business and not to her personal, because her numbers were going up. So, we need to learn how to really capitalize off of some of those different things. So there truly is a benefit to having not just a car, but even equipment, right? This business credit program we talked about has helped, one guy I know who was doing a lawn mowing business, helped him get the vehicle for business use, like a pickup truck, but get it under the business name. When he went to the dealership, the business profile was strong enough that he didn't have to put down his social, because the business was generating enough money to say, listen, we feel confident that we will loan you this money based on the business profile that you gave me with the EIN number.
I love this. I'm loving this. It says here, if someone has a business that is just starting to make profits and needs to expand quickly to gain more profit, is there a program for them?
It's a great question, right? So if they're starting to make profit, need to expand quickly to gain more profit. To me as a businessman, I've got to say, well, what's driving my profits now, right? And do I have to double down on my marketing, right, to drive more revenue, to make more money? Because banks are in the business of lending money, but they're in the business of lending money to people that deserve it, right?
And you can return it.
Exactly, right? And you can pay them back and you can return it. Now, there are some things you can do strategically to supercharge. I'm in the mortgage business. So in my division, I really love to everybody to go and look at their credit report and take off as much negative items as possible before we submit it, because you just don't want it. It just doesn't look right to submit something and someone have to answer to what that 60, 30, 90-day late was a year ago, because they're going to ask you. Right. So number one, I think that in terms of profits in your business quickly, you got to focus on your credit, because that's the leverage at the end of the day.
Yes.
And like in this credit program that we're talking about with the business credit, they have a credit card hybrid funding program where basically what they do, you have 3 credit scores, right? Experian, Equifax, and TransUnion. And I actually went through this program myself. Okay. They're going to go to multiple banks in each bureau. So let's just say hypothetically, you got a 720 score and a real 720 score, not just one Macy's card. I'm talking about you got a couple things that are on there. So imagine we go to Equifax and we maybe put in 4 or 5 applications, but you get 3 approvals for $15,000. Well, 3 times 15 is 45. That's on, let's say, Equifax. Now we go to Experian and we go to TransUnion, and let's just say hypothetically, we're able to do the same exact thing across all 3 bureaus. Well, now that's 45, that's 90, that's $135,000 you've gotten off of one credit report, but you've maximized it. But so that program, when people sign up for this business credit, it's a part of it as well. So building out your credit is going to be key, because now you have money to put into other places that are really going to help you, generate and blow up your business.
So I know we're coming close to the close. Oh, everybody's jumping on board now. But my quick question is that hopefully it'll go up is how do they get in touch with you to get started? And if I'm understanding, the program is somewhere around $300, is it?
No, it's a little bit more than that.
Okay.
Yeah. So the program is, and I love it because number one, you get what you pay for.
Yes.
So the program is actuality. It's $3,000.
Oh, it's 3,000. Okay.
Over a period of time. If you could pay it up front, you can, by all means. It's an investment. If not, if the person has a 600 credit score in TransUnion, they can finance the program and pay $299 to finance it, because we defined that some people didn't have the $3,000. Now, money is all relative. If I got a guy and we just funded him and he just refinanced his house and he's a businessman, he's got $150,000, $3,000 for this is nothing.
Right.
Right. So it's all relative to where you are. Well, it's $299. Is that relevant? Because if you do it right, you could probably get about $50,000 in business credit and credit lines within the first 5 or 6 months. So
you can pay it off.
Right, exactly. And if you pay it off in the first 180 days, then you save the interest over the balance of it. So when I always talk numbers and I always talk price, you always got to know who you're talking to, because some people will see, hey man, that's inexpensive, and other people will say that is expensive. But at the end of the day, what's expensive to me is running a nonprofit or a business that's not generating money and not getting where you want to go for the next 2 or 3 years. To me, that's expensive.
That's a loss. Yeah, that's a loss.
Right?
So someone's asking here is, can a business guarantee someone else's business? Oh, someone else's business.
Can a business guarantee someone else's business? I'm assuming I'm going to answer the question, and I'm going to say I know an individual can absolutely do that as a social security number. Can you guarantee someone else's loan on their business? Absolutely. If you put your name on the application. Can a business do that for another business? I'm assuming so. And again, if you get the right underwriters, and again, a lot of money that comes to individuals does not come through traditional lending. For businesses, probably a good maybe 70 to 80% of it comes from alternative lenders, and it's not from Chase and Bank of America and TD Bank, because you really and nothing wrong with those institutions.
No, but it serves their purposes. What their purpose is.
Exactly. You've got to cross a lot of T's and a lot of I's when it comes down to it. Private money, not hard money, but softer money is a little bit more forgiving, and they really understand the story. Some institutions, they don't necessarily want to hear your story.
No, they could care less. Can you pay it back? That's all I want.
Pay it back. That's it.
I am having such a wonderful time, but we got to close out, and I'm hating this. So I'm going to talk to the producer and make sure that we have you come back. And
awesome.
I want you to stay on after we close, because I want to talk to you a little more, if you can.
And let's tell them where to go if they want some more information on this. You can definitely go to Cash In on my EIN.com.
Cash In.
Yep.
On my EIN.com.
Yep. You go there, you get a bunch of information. You'll see the software, you'll see the portal. It'll give you a cool understanding of all the lenders that are on the back end. And there's a form that you can fill out if you're really, really interested. And, mark this calendar, this date down that you understood about business credit. And I'll be curious to see where you're at yourself 12 months from now, 2 years, 3 years from now. If you truly believe that your business is going to save your family and take you from point A to point B, but you don't take this conversation seriously, then you're not understanding how the Amazons became the Amazons. And this is the way they did it, by leveraging the banks through the business credit.
Yeah, this was, as the young lady Gina Bardwell said, this was so informative, especially because, as they said, there's about 49 million people who decided that they're going to start businesses in this country.
Right. And
the key is, I'm seeing the opportunity is, number one, educating them on how to set it up properly. But now you got this whole system here that can save me a lot of time. We can talk about the referral aspects of.
Let's go.
Let's do this. Because you think about it, there's all these people who have set up businesses and they're frustrated because of the COVID. They don't want someone telling them how to live their lives. All this stuff comes into play. So I'm speaking to the audience that's listening. Get in touch. Go to Cash In on myein.com.
Absolutely.
You need to relate to Mr. Jeff Broom and get out there and get started. And then, of course, as we grow 12 months from now, we can look at this back in the next year, 2023, and say, look where we're at.
Look where we're at.
And how we've become a profitable business. Like, my world is that I don't mind giving something to Uncle Sam. I'm just not going to give it all to him.
No, we can't give it all to him. I mean, the wealthiest people in the country don't give it all to him. And
that's right.
To purchase, refinance, investment property, whatever it might be, that's also our bread and butter. If we can help you, own a piece of the earth, then by all means, we want, if someone's going to pay rent, they might as well pay it to us. Right?
Yeah. So if you're going to pay, you either got a choice. You either paying somebody's mortgage or you getting somebody to pay yours.
Absolutely. There you go. I get it.
This was wonderful. I would love to have you back again. I'm sure the audience would love to have you also.
Awesome.
And like I said, if you can stay on after the show closes, because I need to talk to you.
Okay, cool.
And so to everybody, thank you for listening. Thank you for participating in Access Wealth Nation. Remember that you need to always look and get your checkup from the neck up and become financially literate. And so I, Dr. Jana B. Woodhouse, signs off, and be blessed and be safe.
She was told that she couldn't play with the boys. She was told that they were too big, too rough, too strong. She was told to give up her dreams and move on. She was told to just be pretty, be quiet, be a lady. She was told that women had to stay on their side of the court, stay in your lane. Playing and competing with men was insane. She was told that men and women would never be equal. Dreaming like that would only be linked to your mind, to your soul. She never listened. She knew that their thinking was old. She was magic. She is the definition of spirit. She is what champions are made of. She is magic.